My name is Orestes Spindiklis, and I am the CEO of ITHAX Acquisition Corp, which is the SPAC. And I'm here to tell you, why we are so excited by this company. Like Prasad said, Mondi is a modern marketplace and a technology platform, which is disrupting a $1 trillion segment of the travel market. Now, how does it differ from other household marketplaces that you know, like Expedia or Booking.com? The main difference is that those guys, they sell flights and hotels at standard full-priced rates to the entire world, whilst Mondi is selling privately negotiated airfare and hotels to the $1 trillion segment of the travel professionals, gig economy workers, leisure travel agents, small and medium-sized enterprises, and other membership organizations and subscribers. We, the sponsor of the SPAC, we're a combination of an investment bank, which is Axia Ventures, and Ithaca Capital, the travel and hospitality dedicated private equity fund that I have founded. We are experts in this sector, and there are 4 reasons why we are extremely excited by Mondi. The first one is that it's clearly a growth play. It has been growing 41% organically, 63% if you include M&A from 2015 to 2019. And this is a result of its very disruptive business model. But number 2, in addition to being a growth story, an exciting growth story, it is a value play in the sense that it is already the market leader in a subsegment of this $1 trillion market, which is a $70 billion private airfare market. And by virtue of that, it has established revenues, more than $3 billion of gross transaction volume, $177 million of net revenues, and $46 million of EBITDA. These are actually 2019 numbers. So it is a growth story with a value element and actual existing profitability. Thirdly, it is a company that has grown also not only organically, but through acquisitions, through M&A, which makes it a working M&A platform and a sector consolidation and roll-up play, quadrupling the returns of the targets that is acquired. And number 4, our valuation here is compelling as a result of the recovery, which make this effectively a pandemic recovery play. So Mondi is not only the most exciting travel tech story out there, but has 4 extremely unique elements: growth, value, M&A, and also a pandemic recovery play. So the transaction, the SPAC transaction, is fairly simple. We have about up to $300 million going into the company. $50 million of that is a PIPE that we closed and announced a few weeks ago. The stage we are in now, we have announced the transaction a few weeks ago, and we are in the period between announcement and closing. So the way to participate in this exciting story is through the ITHAX stock, ITHX. Now, I will only focus on 2 points in the transaction. The first one is that we have closed a $50 million all equity PIPE, which is something unique in the sector. Most of the companies that you see going through SPAC routes, either these days have no PIPE, or the PIPE is mostly a structured product, either a convert or something of that nature. In our case, we have a pure equity PIPE at $10, which validates the transaction and the strength of this company. And number 2, the process of up to $300 million, they are not necessary to cover operating losses because it's a cash flow positive, profitable undertaking, and therefore they are used accretively to execute an M&A strategy, EBIT multiples which are lower than what we are bringing with the market markets. So Mondi, as you can see in this slide, it is disrupting the right-hand side of the equation, what we call the assisted affiliated travel, which is actually even larger than self-service segment, which has already been disrupted in the 90s by the likes of Expedia, Booking.com, and the direct channels of the airlines and the hotels. So Mondi is effectively, after decades of a very dormant and archaic $1 trillion assisted segment of the travel market, there is finally a player that is disrupting that. And how is it doing that? Mondi is doing that by solving the problems of both its customers, which are the gig economy workers and the travel professionals, but also the original suppliers, which are the airlines and the hotels. On the perspective of the travel professionals and the gig economy, the problem that Mondi solves is that The existing players, which as you can see, this is a blue screen, is an example of these existing kind of legacy systems. Apart from having a technology which is fairly antiquated, it is command-based, a bit like old MS-DOS. It doesn't work on a smartphone. It doesn't support any fintech solution, only payment by credit card. Apart from having fairly antiquated technology solutions, in terms of content, it only provides full price content. The same content that the consumer can find, on Expedia Booking or the direct websites of the airlines and the hotels. So these two problems of the travel professionals, of the customers, Mondi is solving through this modern operating system. You can see the screenshot in the center. It is akin to the transition from MS-DOS to Windows. It works on a smartphone. It works, or it supports all sort of fintech solutions and payment solutions. And it is the marketplace that connects everybody who's on the left, the airlines, the hotels, wholesalers, with leisure travel agents, gig economy workers, corporations, etc. A typical example, a flight from London to New York would be $1,000, the same price you will find on the online travel agents, the same price you will find on the website of the airline. Mondi would get it for about $800, say on average. It would mark it up by 5% on average, would sell it to the gig economy or the leisure travel agent, and then they would add their own margin and on-sell it to the consumer. Now, why is Mondi getting the content at a discount or a privately negotiated fare, let us say? This is because it solves the problems of the travel suppliers, which are the hotels and the airlines. If you are an airline, the main issue that you had, even before COVID and now even more, is that you have excess capacity. There was 20% excess capacity on domestic flights and 30% in international flights, and that was in 2019, which was the peak of the travel. Now it's even more, it's almost doubled because of COVID. Now, so the airline needs a channel to push this excess capacity. It can try to sell it on Expedia and Booking, but if it does so at a discount, it would be cannibalizing its own sales, because every flight sold on an online travel agent is one less flight sold on the airline's direct website. So the airline is looking for alternative channels to push this inventory, at a discount without cannibalizing its own sales, and a channel that doesn't compete with its own sales channels. And this is where Mondi comes into the picture, because Mondi is not selling directly to the consumer, but is selling to a growing cohort of leisure travel agents, gig economy workers, small and medium-sized enterprises, which are channels that are not competing with the direct sales of the airline. Now, the same tool that we have discussed is solving the issues of the suppliers and the customers, and originally disrupted the leisure travel agency segment of the market. As you can see in this slide, the same agile tool can be used to provide the same solutions to different problems, to different segments of the distribution networks in the travel market, which are now the gig economy workers, who are basically individuals, a bit like Uber drivers, working from home, selling travel to their networks of friends, family. You have small and medium-sized enterprises, you have membership organizations. So Mondi's tools can be used to provide solutions to almost the entire segment of this 1 trillion assisted travel marketplace. In this slide, you can see the actual performance of the company, how it's got the growth, the dynamic growth we have discussed, and how it has grown in the 4 years leading to pandemic. The most important point on this slide is the bottom part, which you can see the company more than doubling its market share every few years. And this is a result of this disruptive business model that we have discussed. This is the company of 2018, 2019. Now, the company of today is very different from the company of 19, and the company of 2023 will be very different from the company of today. Why is that? Mondi has already become the de facto operating system of this segment of the market we're talking about, the private airfare market. To give you a few indications, 50 million searches were conducted in 2019 per day on these operating systems of Mondi. 5.4 million flights were sold. To give you a sense of scale, 7 million have been sold by the largest online travel agent globally in the same year. So once Mondi captured the distribution network of a fairly kind of modestly margin business, they said, what else do our customers need? We are giving them the booking engine and the content and the privately negotiated flights and hotels. What else do they need? They need travel insurance. I will sell them travel insurance. They need fraud protection tools. I will sell them fraud protection tools. They need CRM. We will sell them CRM. So effectively, Mondi became travel solutions in a box, thereby also diversifying from the modest margins of a markup on a flight to having all these ancillary, higher margin, stickier, and recurring revenues, which have led to the revenue per ticket of the company going from the teens to 2019, $32 per ticket in 2019. We're projecting a $42 revenue per ticket in 2023. The company already year to date in 2021 has exceeded and eclipsed that by 20% to reach a $52 revenue per ticket. So this is the company of today and how it has already transformed from the company of the last few years. Now, the company of 2023 and 2024 is going to be even more exciting. And again, we can use the same trichotomy of content, technology, and distribution. On the content side, Mondee is the leader in private airfare, right? So, but why would it sell to its network, which is the biggest and most powerful network of leisure travel agents to date? There are about 60,000 of these guys out there and a few 100,000 non-accredited. Mondee has 50,000 of those, so a big, the biggest market penetration. So why just sell them flights? Mondee can sell them hotels, for example. Hotel content has been added in 2019 for an acquisition and is already 10% of the business. But why stop there? Why not add cruises? Why not add car rentals? So this is what the company is doing now, and it's going to be enhanced the pace of this growth through M&A by acquiring players in the cruise ship, hotel, and similarly, and this content that we're talking about. Then on the distribution side, why would the company only sell to a certain subsegment of the market that is the market leader? So the company now is selling beyond the leisure travel agents, which was the original opportunity. The original opportunity was to disrupt segment through that, to disrupt travel through that segment. Now Mondee is targeting gig economy workers. Is targeting small and medium-sized enterprises. You can see the products here. Trip Planet, for example, is a subscription product that was only launched in the summer of this year. And in a matter of few months, it now has access to more than 4 million users. Trip Planet, what it does is effectively, if you're a small and medium enterprise or a membership organization, you pay a subscription of $100 every month, and then you have access to this special content, this discounted, privately negotiated content that you don't get on the online travel agents. Similar things, Mondee is launching AMPA, which is a subscription-based product, lower price, to target now directly the subscriber consumer, the frequent traveler, value-savvy consumer, which is in the beta stage, and we feel that it has the potential to disrupt an even wider segment of the market. So this is the growth, basically, predictably extending beyond flights to hotels, cruises, car rentals, and other content, and then on the distribution, going beyond the segment of the market that is already the market leader to disrupt, again, very predictably, the entire spectrum of this 1 trillion assisted travel market. The second engine of growth is M&A, mergers and acquisitions. The company acquired 15 targets in the last 10 years, so clearly has the experience and the culture to assimilate and integrate in its ecosystem, smaller players. Those players, Mondee has quadrupled their returns, for example, the first 7 at 25 million of revenues in 2015. That same 7 players as part of the Mondee ecosystem had 100 million of net revenues, which is 4x in less than 4 years. And then along similar lines, the process of the SPAC and the PIPE will be used to acquire certain pre-identified targets, which, as you can see from this slide, they fit well within the expansion into hotels, into cruises, into packages. So a very clearly defined accretive M&A strategy. And these targets that have been identified and advanced in negotiations can be acquired at lower EBITDA multiples than what we are bringing Mondee to the public markets. Team, Prasad has already spoken to you. He's the charismatic CEO of the company. He has already sold 2 companies to Mercedes and Lowe's in his prior career. Jim, who is the COO and also on the line, he has led organizations such as EBS, BTI, and then Michael Thomas, the head of retail, has sold companies to Amadeus and Travelport. Effectively, is a very talented team with experience in both travel and technology, which is 100% aligned to execute the vision because none of them is exiting their stake. They are rolling 100% of their stake in the company and staying in the long run, which takes us to valuation. Our valuation methodology is differentiated from some of the hyperbole that you have seen out there in the SPAC market. We are looking at this more as a private equity transaction. We are effectively only making 2 assumptions. The first one is that the travel will recover in 2023 to the 2019 levels. This is very conservative because Mondi's networks are mostly leisure travel, which is recovering much faster than business travel. And the second assumption that we are doing is that the revenue per ticket of Mondi, and you can see it in the middle, would grow from $31 to $42.6. Like I said before, this assumption, which we had for 2023, has already been eclipsed by 20% in 2021, with the company reaching $52 per ticket already. And this is a result of this diversification in the revenue streams that we have discussed before, which is insurance solutions like InsurTech, is payment solutions, so fintech, ancillaries, and other such services provided as part of the travel solutions in a box. Here you can see this diversification in the revenue streams. By the way, this 265 million that you see here, you see basically how the revenues are growing from 178 in 2019 to 265 in 2023. And you can also see the breakdown in the different categories. As you can see, there is a push, to diversify beyond the traditional markup business. And here we're talking that by 2023, almost a third of these revenues are InsurTech or fintech that should command by far multiples of the very conservative 10x that we're applying for our valuation. And again, extremely important that this 265 million figure you see is based on a $42 per ticket when we are already at 52. Which brings us to this kind of summary. We are underwriting the valuation 10x, 10.5x on this 80 million EBITDA. This 80 million EBITDA is an extremely conservative scenario. Why? Because the revenue per ticket is assumed to be 42. We are already at $52. So this is another 35 million of EBITDA, as you can see here. Market share, you have seen how this company every few years is doubling and tripling its market share. We have assumed no growth in market share. So it's very reasonable that this company will grow from 4, 5, 6% to 7, 8, 9% of the market, actually even more. If you add some modest growth in market share, you are adding another 20, 30 million of EBITDA, as you can see here. And then these subscription products we mentioned that already have 4 million plus users, we have assigned zero value in the base case scenario. If you add some moderate value there, you are adding another 20, 30 million. And then the M&A, which we haven't included at all, adds another 45 million based on those targets that have been identified. So we have underwritten this transaction on an 80 million EBITDA, when on a more blue sky scenario, you can be achieving 200 plus million of EBITDA. This is the P&L, the past P&L and the future P&L. Again, important that we have historical profitability, 46 million of EBITDA in 19. The 2021 numbers, we made this table back in March, have been exceeded by 25% based on today's numbers. So goes back to the point we made before about this being a value play. And then takes us the last part of this presentation is the comp set, right? We said we are underwriting an 80 million EBITDA. Most likely it's going to be much larger, even more than 200 in a blue sky scenario, depending on the recovery of the travel market. So what do we benchmark it against? We could have used technology companies with very similar growth. I mean, Mondi is growing 41% organically, 63% with M&A. This takes us in the realms of Uber and Netflix. Instead, we use the incumbents, the traditional GDSs, the blue screens that we have seen before that Mondi has disrupted, which is Amadeus, Sabre, the online travel agents, Booking, Expedia, and travel management companies. But even against this benchmarking, which as you can see from the bottom of this slide, these companies that we have used as comps, they are growing 7%, 10%, 15%. They are not growing, 41% organically like Mondi. But even against this comp set, Mondi is more at, we're bringing the company to market at more than 30% discount based on these figures that we did in December. Now, travel has recovered since then. So these 5 comp sets have added another 1 or 2 rounds to their EBITDA. So we are talking discounts of more than 40% to a comp set that is growing 4 or 5 or 6 times slower. The same slide, this is the last slide, is the same picture, but looking at the entire travel market, not just technology companies. So we are coming at discounts to traditional hotel operators, cruise ship companies. You can see if you're going to buy the index of hotels that are growing only 4%, right, 4% a year, very highly levered, you will be paying 14 times EBITDA. We are bringing you this company at 10.5 times. Almost the same multiple as cruises that are growing also very slowly, and many of them are levered to the point of financial distress. So the point here is that Mondi is possibly the most exciting risk-adjusted trade if somebody wants to take a bet on the recovery of the travel. So to summarize, this is a highly disruptive business model with exponential growth, which has already proven its worth by disrupting a segment of 70 billion market and becoming the market leader in that market. And is now very predictably disrupting the entire 1 trillion market through adding content and distribution. Number two, the proceeds of the transaction will be used to do accretive M&A at lower multiples than what we're coming to market. So 6 to 8 times EBITDA, we're coming at 10 times EBITDA. And number three, the valuation itself is a deep discount to comps that are growing much slower. So to me, this is the most exciting story in travel tech, and that is why we are investing as an expert in this sector in Mondi. And thank you very much for listening.